From January 1st, crypto investors can no longer keep HMRC in the dark, as anyone buying or selling crypto must share their account details or risk penalties. My name is Jack Reivers and welcome to this year's first episode of Tax Tidbits. HMRC is certainly ringing in the new year in an unconventional way by automatically collecting data from crypto exchanges. These are essentially banks, but for cryptocurrencies. The aim of this is to clamp down on unpaid tax, especially capital gains tax due on gains made from selling crypto for more than it was purchased for, which can be pretty eye-watering due to crypto's roller coaster-like price swings. HMRC estimates this could bring in around £300 million over the next 5 years. The new rules make it much harder for the crypto-rich to quietly forget about tax bills, with exchanges required to hand over accurate user earnings or face penalties themselves. This change comes alongside an FCA consultation on tighter crypto regulations aimed at improving consumer protection, tackle market abuse, and increase trust in the sector. The government has hit the brakes on its inheritance tax plans, confirming that from April 2026, the inheritance tax threshold for the 100% relief for farms and businesses will apply up to £2.5 million per estate, up from the original £1 million. Additionally, any assets above £2.5 million will still receive a 50% relief, rather than being fully exposed to inheritance tax. The change, which was announced just before Christmas, follows loud pushback from farmers and business owners and is intended to protect more family farms. The allowance can be passed between spouses or civil partners, potentially doubling to £5 million, and even applies to people widowed before the rules kick in. This tweak will halve the number of estates caught by the changes, but people aren't exactly celebrating, as months of uncertainty has already led many families to make rushed or irreversible succession decisions. So while the change is a positive one for many farmers, it is just a reminder that tax policies shouldn't feel like a bumpy ride across a ploughed field. Self-employed universal credit claimants could face a reporting nightmare under Making Tax Digital for income tax, potentially needing to file up to 17 separate reports a year. MTD alone requires quarterly updates plus a final tax return, but Universal Credit already demands monthly income and expense submissions, and there's currently no exemption in place for self-employed Universal Credit claimants in HMRC's guidance. That means that tradespeople, carers, driving instructors, and other small business owners could be juggling reports almost every 3 weeks, forcing them into continuous, disconnected compliance with deadlines that don't add up and rules that don't quite match. People are arguing that this is completely unnecessary and that an exception should be introduced, particularly because more people will fall under MTD in the coming years. The Bank of England gave borrowers an early Christmas present this year as they cut interest rates from 4% to 3.75% in a nail-biting 5 against 4 vote, marking the 6th reduction since last August. The move aims to ease the squeeze on households and businesses after sluggish economic growth and falling inflation, with inflation easing to 3.2%, its lowest in 8 months. Chancellor Rachel Reeves called it good news for families with mortgages and businesses with loans, proving that even in the world of central banking, you can find a little Christmas cheer, no turtle doves or partridges required. Energy bills are creeping up slightly for millions of households in England, Scotland and Wales, as Ofgem nudges the price cap up by 2%, roughly £3 per year for the average household. Electricity has become a bit pricier and gas a tiny bit cheaper, so heavy electricity users will feel this change the most. Standing charges are also increasing by 2 to 3%, and with winter biting, people are turning up their heating, hoping not to freeze. It's important to note that help is at hand for the most vulnerable, with cold weather payments, the warm home discount, and winter fuel payments. However, there is better news on the horizon, as from April some levies are being cut, as confirmed in the budget, meaning households could save around £150 per year. So winter may still sting a little, but spring might finally bring a warm glow to your energy bills. And that's a wrap on this week's Tax Tidbits. If you liked this video, make sure to give it a thumbs up and subscribe to our channel so you don't miss any of our videos. See you next week.